late this morning, and I apologize for that 5-minute tardiness. If you would, please take a moment to, in the document tab here, first off, I want to say good morning to everyone, Bill McKee, Andy. It seems there's more John Persons here than there really are in existence, unless it would be John L. Person, Jr., Senior, the third. Now there's the fourth or the fifth. Anyway, just a quick sound check here, make sure everything is lively and working well. Little sound check, sounds good. Thanks, Bill. Thank you very much, everybody. Okay, well, we have a new visitor in here, Terry Thompson. Don't worry about things. I think you'll be quick to pick things up. At the very least, if you go to the Documents tab here at the bottom, okay, click on the little upload arrow, and then I've checked it so that you can see the latest one. This is the TTU weekly document. All right, so if you'd like, you can, you need a Microsoft Office Word to open it, or there's a free link, and I forgot the free link, and Bill McKee or Andy, one of our, or Sonia, good morning, or one of our many students are all allowed to place stuff in here and talk, as we have a lot of good participation. So we have this week a real lively weekly option mentoring session. Last year, it's always nice to do an in-person and meet people in person and say, last year was great, thank you. And I'm saying that in front of everybody that's sitting here in front of me. So I do know last year we had just an incredible year. It was very nice. And so with that, we're going to continue with what we did. Ruth Watson, thank you so much. Open WW, if you do not have, you know what, Ruth, maybe I should put that in the instructions for login and put that for free Word access. That might be a good thought to do, so I never have to go through that again. OpenOffice.org for free Word access. Pretty cool. Pretty cool there. There you go. Open, and it will make that font just slightly more visible for the world. What do you say we go to like 18? And we'll get to the important stuff, our analysis, so we know what to do this week. So file, let's save as, let's go to save, delete this, documents, upload, talking out loud. It's always better than, I guess, not talking, right? Beats the alternative. So where do we have? All right, so there it is for free Word access. So that should be from now on. I think that's awesome. And then I don't have to, you know, just get the stuff out of the way for the beginning of the year. And all right, so let's get jamming. I'll let you all. I always like to start with a weekly positive thought. And you've always heard that trading can be, it's not a sprint, it's a marathon. Well, it could be a sprint if you're a day trader. It could be a sprint if you're looking for, it depends on your time horizon for the expected results. That's a big word. What do I mean by it depends on the time horizon for the expected results? Well, we have several proprietary setups that we've been teaching for years, decades, like a high closed doji, a low closed doji, not to be undermined by any stretch of the imagination because it has a defined entry, a defined risk, and an expectation of how soon you should expect the move to occur. So if you're an options trader and you scan for a weekly high closed doji, then you know not to buy a weekly option because you need within 2 time periods for something to manifest. Makes sense, right? So already the high closed doji, logically, depending on whether it's a 15-minute high closed doji, 2 bars would be 30 minutes. So a sprint would be, hey, I think in the next 2 hours, which is 8 15-minute time periods, if you follow me there. Again, if you had a 15-minute day trading high close doji, then if you need to see positive performance from that trigger, then at least 2 bars have to go by. That's 30 minutes. And then you need at least a few more bars after that, 5 or 6 bars, for the trend to mature. So automatically, you know, if you have a 15-minute high close doji, if it is going to turn into a defined day trading trend, you could be into the trade up to what? Maybe 8 bars, 8 time periods. So if you have that same logic applied to a day, it could take up to 8 days. If it's a monthly, 8 months. If it's a weekly, 8 weeks. So if you're depending on your time horizon for the expected results, and that's that subtle read between the lines what I meant. A lot of times I write stuff that only between my left and my right ear I understand, because I assume everyone's either read the course correctly, retained the information, and know as much as I do after they take a one-day course with me. No one said I'm the sharpest knife in the drawer. That's not accurate thinking. And for a new person that joins the room, they go, what the hell's a high close doji? So with that said, I think you can all depend on your time horizon for expected results and what that holding period is. What I've learned, and what's most importantly, is simply this. No matter how great the setup or the belief that you're going to make money, it's always the correct position size and money management that's important. That's how we make money at the end of the day, or the end of the week, or the end of the month, or whatever it is, okay? If you're not properly positioned and the market takes off, as I jokingly say, the old phrase was in the old days, whenever you're right, you're always in 1. Whenever you're wrong, you're always in 100. That's not properly being positioned. Because you believe it can't go any lower, I'm just going to load the boat, and this is the one that I'm retiring on. And that's the one, I always found, the one that you feel the most comfortable with that you can't lose on, that's the loser. And everyone in the room is grinning right now because they go, yep, been there, done that, right? You can't lose on this one, man. Come on, let the crowd hear you. Speak up. Amen to that one. So this is going to be a great year ahead of us. That I can tell you. You know, we're very selective. If you noticed, we've been very selective. We've had a lot of great trade setups. You know, no one ever said you had to sit in front of your screen and wait and to trade all the time. A lot of this game is, in this business, is you wait for the right setup. And Friday was a perfect example. Yours truly had it. I mean, I'm done with another. I better lose a limb. Knock on wood, that doesn't happen, of course. But I don't want to see another doctor unless they're sitting in front of me asking for trading decisions or looking to learn to trade, because I do not want to see another doctor, I'm here to tell you. And they always seem to schedule these things, their appointments, their follow-ups, their surgeries, either on the market when it's going to have a great move, a Fed day, or an unemployment day. I can't figure it out. Anyway, it's always a Friday. That's their day to see patients, I think. So they can see the patients in the morning, off to the golf course in the afternoon. I don't know. I'm making that up. But the moral of the story is Friday we missed the downside on the move. We waited all day. Great teamwork. Bill McKee talking about, hey, I don't see this as a buy down here, guys. Wait. We saw that market pull back. We saw divergence. We saw a lot of great setups. And bang, we got the right setup at the right time for a nice pop on a high closed doji trigger. I mean, it's just a great day trade. And you know, that's it. There's something for everyone. But sometimes there's something for everyone that you can absolutely get crushed on. And you know, if you can learn patience and discipline, and again, no matter how great the setup or the belief that you make money, it's always the correct position side and risk management that's important. So my observations for the week, I'll let you guys go through all this real simple. I think markets are undergoing a test of strength for various sectors as we experience a shift between those adjusting positions for not just profit taking for tax deferment purposes, as well as capital for asset reallocation. Meaning investors, could be hedge fund manager, pension fund managers, are raising money, getting set to buy select stocks, as we see this seasonal January break. It can also be better explained as a bit of sector rotational grind, and that's why it's ironic last year. A lot of people said it was very difficult for stock picking, and I think a lot of you know we didn't have such a hard time picking stocks last year. Last year we were in a lot of right stocks in a lot of right sectors because we identified a lot of that sector rotational grind. Many of you are in the room. You can certainly type anything you want if you want to say, John, you're full of it. Not one person will mark that because it's not. The fact is we did a great job using the tools that are unique to what I try to teach here. I'm sitting here in an Edward Jones building. The guy who runs that franchise has a big meeting this week for a lot of people that are coming in. He often asks me he has to follow this cookie cutter sheet. If you're a certain age, you go into certain instruments. You're so much in stock. And if you're so much in stock, so much of that is in a diversified portfolio. And you've got to be in a certain amount of bonds. And that is your performance. Younger you are, the more aggressive stock portfolio you are in. The older you are, you're in more bonds. You might be in some tax-free munis, excuse me. So the moral of the story is they're all preparing for their clients to come in for the week and start to look at. That's just one guy. And so I'm here to tell you this is what is happening. And I think as we start to see this week unfold, I always look at that. I've been warning about this exposure to biotech, and I think we are seeing some of the biotech start to unravel a little bit. All right? It's interesting, if anyone saw the Grammys last night, I think Kevin Spacey said, "Thank you to Netflix." I came out of my chair because I was flipping between Braveheart, which I've seen about 1,000 times, right? And then the Golden Globes, and I didn't want to go in the bedroom and because that's what Mary was glued to, and I went, wow. I mean, imagine the era that if Netflix continues to create Golden Globe winners and creates more content, CBS, HBO, all of these things, there could be a change. Interesting, Netflix created a weekly high close doji. We also have talked to Netflix till we're blue in the face. And the funny thing is with Netflix is, while it did generate a weekly high close doji, it also generated a PPS sell signal on a weekly basis that I find to be fairly interesting. The seasonal aspect for Netflix is that it has a very strong performance generally because of those earnings, those next earnings. So it did form, a low close doji last week, a high close doji the week before. But here's what I want to kind of focus in on. I'm looking at a weekly on balance volume indicator, which as many of you see, we have lower lows. Now in the last few weeks, if you take a look at this little, what I'm going to draw here is kind of like a little bit of convergence. As you see, they're not really selling off the market on heavy volume. We've seen a very strong potential, and I kind of, if I start to draw this pattern in, you may find that we're starting to see one of these like little contractions in what we find a pattern known as a declining wedge. What I do find interesting as price, even though we did not make on a daily basis a new lower closing price low than this last low, we are starting to see more of the volume. Now, today, if I'm not mistaken, is the 12th, all day long. Earnings are on the 20th. So I will be watching this week to see if this sell signal does not have follow through, then it's a meaningless sell signal, and we might have another shot or a great shot for a significant move to the upside in Netflix. It's got nothing to do with Kevin Spacey thanking Netflix. What it has is that we've been talking about Netflix for about the last, 3 weeks. It was on your list. It has a seasonal tendency. It has a strong seasonal tendency at the beginning of the year. Maybe it's got something to do with, I don't know, people just do what? Stay inside in the winter instead of go out. And if it rains in Florida, maybe perhaps, you know, you do whatever. But needless to say, I mean, this is where it's going to get tough. And when I say tough, most of you, if we take a look at this potential declining wedge formation, and I'll draw it on more of a daily basis, what's really interesting about the pattern, okay, is as I draw this in here a little bit more correctly, and some of you have taken that little course that I put together in a breakout strategy, and some of you will identify that not only did this day generate a daily sell signal, but you'll also notice it's a last conditional change, so I don't really need to go off and talk much about it. Now here's my biggest problem. If this was a normal day, I would place a buy stop at 350, just above 350 and a half. I would place a buy stop because if the market starts to run up, it would stop me in on a long position. Now, why do I say that's a difficult situation? Because on that day is earnings, and if you have a buy stop, and most of us use buy market, not buy limits, you're going to get stopped in wherever it opens, and it could open up here. So we don't want to do that. So what would this be? It would be an options play, wouldn't it? Now, in the rule of wedges, you do not want to see, so, you know, I don't want to get into a whole training session with you guys because that's not what the room is designed to do. What the room is designed to do is to get you engaged and to think and to act on your own as you've studied the course material. But needless to say, if you've got a weekly sell signal and a day sell signal and the market doesn't go down and the volume when it did move down is light, how many people do you think are maybe starting to accumulate buys in here? More importantly, let's just examine this a little carefully, and let's throw up your typical indicators that the public would use. So I'm going to throw up the kitchen sink. I got moving average, convergence, divergence. I got stochastics. I got RSI. I got the volume histogram up there that a lot of people love to use still. No clue why. But if you guys can figure out what this volume histogram is kind of sharing with you, you know, what the trend direction of the market is, God bless you. I think you could say, well, the volume went up when the trend went down, but the volume's not doing anything in here. I don't know. All right. Stochastics exactly not at an oversold. Interesting, you have a potential convergence on MACD moving average, but the histogram is in it's starting to show a loss of positive momentum. The relative strength index isn't at an oversold level. So this is more like a neutral type of indicator, and I don't think anyone would really be looking at this unless they understand seasonals. But what I want to watch for is between today's trade and the day before earnings, which, of course, if you add 7 days, next Tuesday is when they come out, right? It'd be next week. So I want to watch Netflix to see how it trades, to see if we get that weekly, daily convergence with the OBV. This doesn't tell me much. This tells me we're in neutral territory. So if someone was watching the RSI, so looking at the general public's information, it's not really giving us a whole lot of really great insight. Here's the weekly look. If you were looking at the weekly look, MACD looks ugly. RSI is getting a little oversold, but can remain oversold. And I think that the whole sell-off is this weekly indicator right there. Really doesn't match up. There's something sneaky going on. So what I want to do is watch Netflix over the next couple days to see if we pop out of, or if either one or two things. Either we're going to just kind of start to pop up, but watch a close over 350. Otherwise, if we make new lower lows with no volume and we start to get maybe a recovery towards weekend and volume precedes price, this is going to be one for a call option, and we'll follow up more with this. Okay. Anyway, just wanted to make mention of that. there is a couple other things. If we look at the biotech sector, the IBB. Now, I've done some analysis till I'm about blue in the face. And one of the things that I could see is that as strong as this biotech on a monthly basis is, you know, when you look at the biotech sector or anything that has that type of, and remember where it's come from, the biotech sector all of a sudden lit the boards, and we saw last year a whale of a correction. So if we want to stay true to form, and if it's going to remain still, you know, kind of in an uptrend through the ages, let's just this is one that even if it wants to come up, we've talked about trend line, it's just gone hyperbolic on us. You know what I'm saying? So if it did want to in time, I think in time, this is a monthly chart. So is this this week, next week, the week after? How many bars could it take? It could take up to 3 to 4 bars. Well, that's by end of April. So I think that by April, we're going to see a whale of a correction in this sector, because this little rally here on a monthly basis has been on very insignificant volume. A higher high with no volume is not good for the long term. When we take a look at the weekly, it's the same story. You got to admit, that's a little bit spooky. Seasonally, this thing starts to peak out. And it did peak out, if you look at it on a scale, a little bit early. It peaks out, it rallies, and here's the last week. So this is a week where we want to probably pay real close attention to IBB. As we all know what happens to stocks. When I tell you about them, and all of a sudden I warn you about what might happen, and then you're not positioned for it, they yank the plug, and you're never going to get in it. It's done. I mean, so when the institutions decide to liquidate this sucker, it's done. It's gone. It's history. All right? Anyway, I didn't realize some may or may not have Alt B set up here, so I'll go back to, no, I can't do that. I'm on one screen. All right, so let's go back. So that's what I mean by that sector. When I look at oil service, OIH, all right, well, we all know that OIH is pretty ugly. And there's no doubt about it. But on or about the 16th, which is right now, we start that, you know, rebound. We make a low at the middle of, it is actually conforming to its seasonal trend. And notice on the daily chart, I would like to see if this market's going to form some kind of convergence in here. All right? That's the OIH. Let's take a look at the XOP. Same thing. Had a big surge to the upsides, coming back, got some shadows on the weekly basis, testing the lows. Volume isn't looking that great, but it's this week we start to see possibly an upside. So what I'm thinking is we're going to see some sector rotation. There's some interesting names that I've given you on your list. I'm going to just cut to the chase because we're running out of time, and my bad on that one. And take a listing of, and take the time to read through this, and maybe you'll understand why my message was trying to be. Social media stocks got beat up into the last year. They're starting to come back. Twitter, PA stock alerts, you know, we took a position. Weekly high close doji and Twitter existed. We've traded Twitter before the holidays. We did a dual strategy. Went net long and naked call, and then to ride out theta or time decay, did a credit put spread. We got out, as I tweeted out, on the high of that rally, and everyone got that tweet, I'm sure. In addition, we wrote out the credit put spread, which was pretty good strategizing for a lot of various reasons that we did that. High close doji, and as well as volume analysis helped us choose, and again, looking at what the holidays were going to come up with. So that was kind of cool. Anyway, this week, we have another, I swear to God, it seems like we just had an FOMC meeting last week. I mean, didn't it just seem like I just did a beige book a week ago? I mean, it's just like, seems like we just had it. So anyway, beige books this week, got a bunch of bank earnings. This is bank week, big banks. And some of these banks look sickly. Citi, Wells Fargo, JP Morgan's probably one that looks the best. We start first quarter earnings season with Alcoa, which, by the way, formed a weekly high-close bullish pattern on the weekly charts. We could see mid-January break continue to retest last week's low in the indices. We are in a weekly PPS sell mode. The daily charts have not yet generated daily buy signals in any of the top 5 stock indices, and that tells me we're still in an indecisive trading range environment. Here are some of the finer technical bullet points. Let me just point out what I am referring to when I make mention of every stock indice is in a daily weekly sell mode, but you'll notice the third bullet point, 4 of the 5 stock indices generated weekly dojis. All right, so here is the spiders, daily sell signal. Here's the Qs, daily sell signal. Never generated buy signals. None of the stock indices generated a daily buy signal. Now, NYSE is going to generate one if we close on today's open. But every single stock indice on the top line is a daily chart still in a daily sell mode. Every single stock indice on the bottom line is in a weekly sell mode except for the Russell, which makes sense, the January effect. Now, we're in a sell signal, and we formed a doji. So could we come back down? The doji indicates indecision. So I'm pretty opinionated, as many of you know. In the S&P 500, only 203 stocks are above the respective 10-day moving averages. The daily McClellan oscillator is at a negative 154. The weekly formed it's at negative 1.54, so it's almost at 0, Whoa, that's a big difference. GLD is in a weekly buy mode, and it's seasonally strong. In fact, I had Newmont Mining on a buy mode. I forgot to mention that. Any event, you can take the time to read through this. What does this mean? I think you'll find out that weekly volume was light with a negative bias on the daily OBV readings. Look at the daily OBV readings. All right, trend is going down, even though we had a nice surge to the upside. Trend is going down. Look at, they're all below the respective daily moving averages, which are those red lines. That shows that there's a lot of indecision here. So if you think it's a little tricky, I think it is too. And so this style of technical analysis to look at health and breadth of market for all the top stock indices, it is showing that there's a little indecision. I do not see a major crash yet, so I'm not very bearish. I'm just thinking the market could come back down, challenge these lows, and let's see what happens down there. But the fact is, bank stocks, they all have earnings. The KBB and the KRE, they're in weekly sell mode, but let's share something with you guys. If I'm trying to, I'm actually trying to confuse you a little bit. Maybe to instigate, you need to be cautious. How's that? Like, don't be quick on your dome. You know what I'm saying? Let's look at the condition. Let's be a little selective. I think everyone in this trading community can afford to be a little selective, if that makes sense to you guys. So let me look at this with you. Let's look at the KBB. So when I tell you trading range for the last year and change, what is the KBE? It is the regional banks. Excuse me, KRE. Excuse me. Yes, KRE. Let me get back to what I was talking about. You'll see it. Same thing. Same pattern. It's in a pretty strong trading range, isn't it? That's the regional banks. How about the KBB? KBB not sure why it won't. Oh, I think I know why. Regional banks, the KRE, and then the bank spider, larger bank, KBE. So I have a typo, excuse me. No, KBE, not KBB, excuse me. All right, so as you can see, that's a whale of a trading range for both the banks. Now let's compare that to the XLF, which everyone is more in tune with, looking at the diversified financial ETF. So if we take a look at the XLF real quick, that looks dramatically different. Our individual banks that loan money are in a trading range, and the XLF, which is diversified, which means it has insurers, it has the Chicago Mercantile Exchange, and some big banks in there, it looks a little bit different, doesn't it? So when we look at the actual, if you take the overall ETF and just look at banks themselves, it has a different makeup. That's what I wanted to bring to your attention. Since we have this week, and I'm going to go down here, take a look at this. All right, MBFI, you have JP Morgan, Wells Fargo, Bank American, Ozark, Citi, MTB. Who else do we got? Goldman's PNC is a regional bank. Goldman Sachs is not a bank. You're not going to go ask for a home mortgage to Goldman Sachs. SunTrust, STI. So there's a lot of regionals and larger banks coming out this week in earnings. We're going to find out the health of the condition of the market this week. And remember Dow theory. If the economy's poor, banks don't make money, people don't ask for loans. Loan demand has to increase in order for businesses to survive. So that is kind of an important element of the market I want you guys to be aware of. So look at this stocks to watch and setups. I did a little bit of work on this because this is the stuff that I'm going to be looking for this week. Except for Riverbed, RVBD. Except for Riverbed. Except for Riverbed. So that means everything that I've just highlighted here are either still, they're in a seasonally strong period, have had significant corrections from their 52-week highs, which means they probably are near finding some value here, and have bullish volume patterns, which means they've gone down on light volume. But every single one of these names have yet to trigger a buy signal on either a weekly or a daily time frame. All right? So I want to kind of focus on ATI, and it has earnings on 123, Conoco, COP, and Diamond Offshore Drilling. And I look at what I've done for you. I've actually given you what sector it's in, the stock, and the earnings date. That doesn't get much better. If you can't read this, please leave the room. If you don't want to trade stocks, I apologize. I don't mean to be brutal or to be, offensive, but this is pretty much, I'm going to have to say, idiot-proof. I could be wrong there. Now, I would love to every one of you to watch Capital Goods, FLIR. It's kind of a weird thing. It's more like technology, but it's in the capital goods. Watch FLIR. Materials. Owens Corning. Interesting thing about Owens, that's not Owens Corning, it's Owens, Illinois. They're a glass manufacturer, fiberglass. They have all kinds of diversified product. With the way we saw the home builders, we did a big thing about home builders, the ITV, Lennar, Toll, and they got some earnings. Some of the housing's got earnings this week. What's going into a new home? Lumber, a little bit of copper. I think this is the year that people start buying homes again. I talked about 3 weeks ago regulatory reform, and it came on the news last week. Wow. Pretty cool stuff. So we do have our finger on the pulse of a lot of things that the charts are pointing up to me. Anyway, telecom, this is one that came up on I don't know when the earnings, it didn't have an earnings date. I couldn't find out if you guys want to follow up that. That's T-Mobile. And then gaming, not the casinos yet, but it's interesting. The slot machine manufacturers that the casinos buy their equipment from, IGT, if you ever go to the casino and you look at see what slot, all those brand new things that want you, they're like crack, they're penny slots, but each pull is like $5 because you can bet 50 lines, 40,000 different ways. You think you're playing a penny slot and you're out like $4,000. Right. Well, that's IGT and Boyd Gaming. There are their earnings dates there. Take a look at that. So set you up for the rest of the month of January. Seasonal spread trades if you're commodities. Interesting. We look to buy crude, sell April heating oil on or about today, liquidate 12.6. Buy cattle, sell feeder cattle on or about today, liquidate before 3:13. Now I like these two here. And this makes sense. Buy any other currency that's not weighted against gold. Isn't the Swiss franc, gold goes up, the Swiss goes up, right? So if gold peaks towards the end of this month, which it traditionally does, right, the end of January, early February, and the Swiss rallies, then I want to buy the Canadian versus the Swiss, and I want to buy the Aussie versus the Swiss. Now, I like that because maybe perhaps the Aussie has gotten its ass kicked because of its connection as their one single customer is pretty much like China. You know, their cattle, their raw materials, they sell to China. New Zealand, you know, lamb, beef, stuff like that. If you go to Beijing, you're not going to get, and you want to get a filet mignon at a restaurant or a high-end restaurant, it did not come from the U.S. It came from Australia or New Zealand, fact. Now, think of that. I'd like that trade setup, so we'll be talking about that. We got time for that one, but these are the seasonal spread trades that we could look at. And then to conclude, here's our reports. Not much in the difference of today. We've got a bunch of Fed heads speaking because you got the beige book and they want transparency. I think the two most important reports would be, of course, the beige book out Wednesday and retail sales out to find out did consumers spend. I gave you my observations, and I said high-end stores. I did not see this year. I saw the big stores were, believe it or not, it was crazy at the mall. Tory Burch, I don't know if Tory Burch, but everyone kind of changed. And I did not. A couple years ago, I told you there was that shift from Coach. Remember, I was in Chicago, and I said, hey, guys, no one's in Coach, but everyone was in Coors. They were buying those fake Rolex watch or the Rolex watch-looking thing and the big purses, and it was off the charts. Guess what? People got tired of that. Everyone got tired of that, and that's why they got downgraded. So the moral of the story is high-end luxury. High-end luxury is doing really well. New cars are doing well. AutoNation did well. And when I say, unfortunately, the 1% or the half of 1%, Ferrari sales are off the charts. Gucci was off the charts. They're having a hard time with keeping up on inventory. You have to order shoes. I've never seen that in my life before. Not that I shop at Gucci all the time, but I have friends that have friends. I know people in high places, I guess. It always pays. Anyway, for earnings this week, that's what we have to prepare us with. So I think, as my friend Bill McKee and student extraordinaire has said, what I like to prepare you guys for is in this sheet. It's like a Greek family-style restaurant. There's something here for everybody. End of story. You know, whatever you want, pick something out, follow it, all right? And we got to look for more. We got to look for, that was a typo. Shoot. I hope I got the original one. Anyway, so I hope this serves you well. I will be in and out of the room all week for the most part, and I think we've really done an outstanding job. I have to pat myself out of the back. Let's talk about one last one before we conclude, and it's Riverbed Technologies. Okay, so this would be a weekly chart. Schneikes. Look at that volume breakout. Now the daily has a nice little volume move to the upside. Interesting aspect about the daily volume is that the daily volume did have a nice little breakout from its old peak high over here, and it's not there yet. So granted, it's not a huge move that it could come back and test that high. My guess, it's not going to just test the high, but it could take off. So what is the trilogy setup? Well, many of you know what the trilogy setup, and we're not going to get into the specifics of the exact. You should know what it is. Needless to say, if we do get a breakout, and I've put it out there for you, you want to see on Riverbed, a close above 2081 completes a monthly trilogy setup. It's in a PPS buy mode on a monthly basis, weekly basis, and a daily basis. Earnings are on 128. What do I mean by that? There's the monthly buy signal. There's the weekly buy signal. It wasn't a daily buy signal. Today may take that out. But here is your trilogy setup on a monthly basis. Now do you see it? Okay, so maybe we could get lucky and see a pullback into this as the market's truly bullish. I mean, I love this type of pattern, my friends. This is the pattern that I really, really, really love. Love. Phenomenal. I look for this type of stuff. All right? I mean, some people, like the cup and handle. Some people like the wedge. I like this contraction. This market has the stair step. It pulls up and it has a small sell-off, right? Doesn't go anywhere. And when it sells off, it doesn't have any volume behind it. And when all it's doing is getting ready to break out. So moral of the story, this market, if it's an A, B, C, D, if it's a breakout move, we're talking possibly back up to maybe somewhere in this zone. That would be the measurement objective, A, B, C, D wave. So if we got a pullback, and this is a monthly chart, where are we in the month? The beginning. So maybe if we get an early pullback, get near monthly pivot support. Monthly pivots giving us a higher red and a higher green. That's got nothing to do with this green triangle pointing up. So monthly target. Look at the long shadow here in the hammer. Look at the long rejection back in December. There was some buying down in here. Somebody loves Riverbed technology. I don't know what the hell they do, but I'm telling you something. Something's up with this bad guy. It warrants our attention. Anyway, that's what I wanted to bring your attention. This is not a day trade, obviously. This would be a longer term, maybe like I started off. It's not a sprint. This could be a little bit of a marathon. You might need, anywhere from 3 to 6 bars on a monthly time period. It's a $20 stock. So my guess is that if it pulls back into support, the monthly support down here near 19, say a quarter up to 60, maybe that would be a great contender if it's optionable enough. Credit put spread to start with. Maybe go directional. Give yourself 90 days, a high or a high time frame mid-range delta stock replacement. Make sense? God bless everybody. Have a great trading week. I'll see you on and off in the trading room. Thank you. That concludes today's planning and scanning.